Millions of consumers are set to be slugged with higher power bills. Let's go live to Joel Gibson from One Big Switch, the consumer power buying network. Joel, great to see you. Let's start with this announcement by the regulator about the market default price. How does that affect consumers and small business?
So the market default price is essentially it's a safety net that was brought in the mid-2019 to protect households and businesses that don't engage in the market and shop around and switch to discounted offers. Now, about 1 in 10 households is on that government default offer, and it's more in the case of businesses. It's closer to 1 in 5 businesses are on that market default offer. And so what the regulator has told us today is that on the 1st of July, for households, we'll get increases of around $120 to $220, depending on which state and which zone they're in. And for businesses, small businesses on that kind of default offer, we're looking at increases of around $700 to $1,100 from July 1 in the coming year on those default offers. Now, as I say, it's not the majority of the market. We've actually still yet to hear what the majority of discounted market offers will do on the 1st of July. We're waiting mainly on the big 3 retailers to make their announcements in the coming weeks and to fill the picture out for us a little bit. But some of the smaller retailers, as we talked about recently, Kieran, have now increased rates by as much as 285%. So some of those smaller retailers look like they're really, really struggling with these high wholesale prices.
So is that the key here, that it's the higher wholesale price, or organisations, companies trying to gouge here as well?
Well, I don't think we can make that accusation in this case, although I will say, and it was noted in one of the stories today, some of the reporting, that the AER had a very difficult decision to make in terms of these price increases. They have to balance, on the one hand, what is meant to be a safety net for households, some of the most vulnerable households and businesses in the country who haven't shopped around, with also, the interest of businesses. They need to make sure that they don't put retailers out of business. Now, in the UK, we've seen more than 24 retailers go out of business because they just could not make a buck with that government price cap set where it was. And, that government price cap in the UK went up by 54% in April, so much, much more than we're seeing these increases coming here. But you may see here, that government price cap is now reviewed on more frequently than an annual basis, and that's what's happened in the UK. They're now reviewing it 4 times a year because of the volatility of the wholesale markets.
And so, what is driving that right now? That volatility?
Well, it was already happening to some extent before the war in the Ukraine, but clearly that's the sort of cherry on top, if you like. I mean, average wholesale prices around the country are up about 141% year on year. It's more than 200% in Queensland, and it's mainly black coal and gas, of course, that are driving up those prices. In Victoria, for example, where the power stations mainly are brown coal power stations, we saw an increase in the government default offer, a slightly lower increase a week ago than we're now seeing in New South Wales and southeast Queensland. That reflects, I suppose, that the brown coal prices aren't up by nearly as much as black coal and gas, which are the main drivers of these wholesale rates.
So finally, Joel Gibson from One Big Switch, what advice do you have for our viewers this afternoon who might be watching and worried about the spikes in prices? What's the best way to get the best deal here?
Well, the first bit of advice would be, if you're on the government reference price, get off it, because it's the most expensive offer in the market, and it's really just meant to be there as a safety net to catch people who don't shop around and switch to cheaper deals. Now, if you're on a discounted market offer, then you need to switch if you get a big price increase, because there are still some very competitive market offers available. Some of them are even fixed rate plans for up to 12 months, where you can fix your rates at 20% less than the current default market offer for a year. Now, I did that myself recently. Those offers are still available. We're not sure for how much longer, but I think definitely people need to engage in the market this year. They need to be prepared to switch and shop around, especially if they get a big price increase, because if you don't do that in the next year, it's going to become a very expensive mistake.
Certainly looks like it, Joel Gibson. Thank you for your analysis from Joel from One Big Switch, the consumer power buying network.